Hello everyone, and welcome to this Making Tax Digital webinar, all about how you can support your clients if they're not quite ready or don't want to use software. I'm just going to give everyone, let's say, a few moments to get into in terms of the platform. But while we're doing that, for those who don't know me, my name's Chris Downing. I'm the Director for Accounts and Bookkeepers here at Sage. Been at Sage for close to 8 years now, but prior to that, I was an accountant by trade for 19 years. I've experienced, let's say, within technology, the challenges of MTD with VAT, the fact that, yes, we didn't think it was going to happen. We waited the last moment, set up tens of thousands of agent service account and delivered on time. And really, making tax digital income tax is no different. It's possibly the biggest legislation change to hit the UK for over 25 years. And therefore, with MTD, it's all about understanding the details, getting on top of, let's say, the legislation, but more importantly, think about how we can use technology to actually streamline our workflows and, more importantly, get the job done. So in this session, we're going to cover a lot of subjects, from the technicalities, the practicalities, but also how certain technologies can actually help make your life easier. I'm going to cover a lot of content, and this is why really this webinar is on demand. So therefore, if you want to take pictures of those slides, please go ahead, but also more importantly, watch back at your own pace and speed. So with further ado, because we have got an hour, it's a case of what shall we talk about next. But also, more importantly, this is an engaging session. So for those of you who are watching live, the Q&A panel is available. So if you've got any questions or any subject matter which you want a little bit more clarity on, I've got the Q&A panel open, and I'll do my best to answer those questions as we go through. So let's start with a bit of detail, just in case if you're not aware. MTD is happening, and this is all about sole traders and landlords maintaining records digitally, submitting a quarterly update, bit of a digital handshake with HMRC, as well as performing their tax return via software. As accountants, we already use tax software for filing tax returns, but for those who don't work with an accountant, are filing their tax returns via the HMRC portal, and that portal is disappearing. And that portal will disappear depending on which cohort and which year sole traders and landlords come into MTD. So really, it's all about April 2026. This is when those with gross income of more than £50,000, that's gross income from sole traders as well as and/or landlord or rental income, will have to maintain the rules around MTD. A year later, April 2027, that threshold drops down to £30,000, and then from April 2028, it drops down to £20,000. The jury's out in terms of what's going to happen thereafter. But basically, because once you're in for 3 years, even if your revenue drops, one can imagine that MTD is the way that all sole traders, all landlords, and all individuals will eventually submit their tax returns via software at some point in time. But really, what we need to do is get through this phased rollout of MTD. In terms of phasing, as we may have heard recently, MTD for corporation tax is no longer on the radar, and I never thought it was going to be, because we'll have themes like e-invoicing come into play, which basically means that businesses will naturally start using digital solutions to submit as well as to receive sales invoices. In terms of other unincorporated entities such as partnerships are no longer in scope of MTD. And really, let's be honest, there are 3.7 million sole traders and landlords. Well, this is where MTD adds the value. But in terms of partnerships, there are only about 360,000 of them. Over 50% of them are already VAT registered, which means they're already using software. And really, the whole purpose of making tax digital is actually improve the quality of the underlying records. Because when you think about 4.5 million people submit their tax returns in January, which means they're scrabbling around for receipts and bank statements and other items to make it their tax return, maybe from 16, 17, 18 months prior to that. And therefore, the whole point about MTD is capturing information in a more timely manner and basically having a little bit of a better experience in terms of understanding their taxes. So in terms of the detail, let's just think about what our focus is going to be. So when we think about April 2026, we're thinking about our sole traders, which we're working with. We're preparing a full set of accounts, so P&L, balance sheet. They've got fixed assets. They've got sales ledgers to reconcile. They may even have some debt. Then we're also thinking about those more simplified sole traders, income and expenditure, some simple sales invoicing, and also those troublesome landlords. Yeah, a landlord by themselves owning a couple of properties in their own name, that's not too bad. It's when you get joint ownership, that's where it becomes a bit more trickier. It's a case of how you're going to get that combined gross income together for multiple people and submit that split as well as appropriately. But also the fact is the clock is ticking. April 2026 is when actually it's not about just using software, it's also be setting up with MTD. And we've only got, let's hear for it, 158 working days until April. And this is where we need to make sure we're communicating MTD to our clients, but also more importantly, making sure our clients are set up on the HMRC agent services account, as well as think about what software solutions are available, whether you're going to be using software for your clients to use or software you're going to use internally for your clients to actually just share information with you, not once a year, but also quarterly. But also it's the fact that that quarter, that first submission quarter, and the deadline is the 7th of August 2026 in terms of that first quarterly deadline, it's a fact that that's a period when actually there's going to be a lot of change. Not only will be working with our existing clients and submitting that VAT return, which is a very busy period, it's also the fact that 35% of sole traders and landlords do not work with an accountant or bookkeeper today. And therefore, once they realize MTD is happening and they think, yeah, I'm not going to do this by myself, they will obviously start to knock on the doors of accounts and bookkeepers for the very first time, reach out to an agent. So therefore, it's a case of what are your priorities as a business yourself, supporting your existing clients, but also if you wish to be in a position where you want to take on more clients, how do you do so digitally, and how do you do so in a way which actually does not really disrupt your ways of working today, but also delivers a great experience for that new client portfolio. So when we think about how and where and how we're going to know about MTD. Well, HMRC have already done the letters drop. So as agents, you received your letters back in April, March time saying MTD is happening. There's no turning back on this one. And then HMRC then did a letter drop to all those who received or basically submitted gross income of more than £45,000 on their 23-24 tax return. They're dropping letters about 10,000 at a time, and therefore those letters dropped in May and June. Like any letter from HMRC, some clients would have opened them up, some clients may have just put it in the drawer, or some clients may have just said, what's this letter all about? If anything, HMRC feel that they have done their first task. They have informed those who may be coming to MTD. There'll be continuous awareness from HMRC about making tax digital, but the first other next big letter drop will be February next year, February 2026, because those who have submitted their tax return by the 31st of January 2026 from the 24-25 tax year, and that's the year which basically crystallised in the gross income of £50,000, HMRC will know for certain who should be in. HMRC will inform them that they need to be MTD ready, but actually they will not do anything else. Therefore, it'll be up to, let's say, your clients to either sign up themselves or for your clients to work with you and engage them on the agent service account. And for those clients or those unrepresented clients who are not working with an agent, to do it all themselves and be signed up to HMRC by the 31st of March. But the key thing, the clock is ticking, but more importantly, there'll be continuous awareness in some shape or form. But let's start getting to the details of who's in. So who's in is all about that £50,000 or 30,000 or 20,000 a year after. And really the calculation is about thinking about those box values which appear in your tax return today. That's what HMRC will be surfacing. So if you think about the tax return, the SA 103 or the 105 or maybe the 106, any foreign income, it's looking at those turnover, sales and property income boxes. For those of you who are doing rent a room, well, that doesn't actually appear on that situation. That doesn't come into play. But clearly, if you have a sole trader who actually falls into MTD because their gross income is more than £50,000, even though they may be doing rent a room and their threshold is below that 7.5, that will then come into the property side. So this is why it's so important to understand the detail. But also thinking about who's out. Obviously, I said who's out is partnerships, but clearly where you have taxpayers who are part of a trust or an estate, taxpayers have a power of attorney in place. There are rules in terms of they won't be coming to play this time round, but also the fact that that really small cohort who are claiming the married couples allowance, i.e. those couples who are probably in their late 80s or early 90s, they won't be coming to MTD either. Plus also those who may be claiming blind person's allowance as well. MTD will not apply to those this time round. So again, it's really important to understand and do that segmentation to appreciate which clients will be coming into play for MTD. But also we need to be thinking about those submissions, and those submissions are these quarterly updates. Now HMRC will assume that on day one that all your clients have a 5th of April year end. Well, you know you have clients with 31st of March. So just imagine landlords, your grounds worker, those who are claiming CIS refunds, They obviously have 5th of April year ends. You'll probably also have clients who naturally have 5th of April year end, but these are called standard reporting. HMRC will assume all your clients have standard reporting. But actually, if your clients have a 31st of March year end, and this is a calendar year end, you need to inform HMRC within that first quarter via software, not via the HMRC agent service account, but via software, whether you're adopting standard or the calendar approach. So again, this is a note on your client segmentation Excel spreadsheet or practice management solution. You need to make a note in terms of actually, is it standard or calendar, and have you informed HMRC? But also in terms of these quarterly updates aren't a specific period in time. These are cumulative, because really the whole point is this sharing of information to HMRC is not a set of accounts, it's not a tax return, it doesn't need accruals and prepayments and inventory adjustments, it doesn't need depreciation. This is really just bare bones digital record keeping. But also it's the fact that mistakes happen, errors are made, or actually maybe a reflection in terms of how things should be categorized. So for example, it's the fact that these are quarterly updates. These are like a digital handshake, more like a validation that your clients are maintaining their record digitally. And therefore, these quarterly updates, they may be from, let's say, certain periods, but actually they're cumulative, which means that, yes, a quarterly update needs to be made by the 7th of those quarters. So the first quarterly update is on the 7th of August, the next one, the 7th of November. But actually, when you think about that first quarterly period being the 6th of April to the 5th of July, you can submit that first quarterly update 10 days from that date. So it could be from the 15th of July, but then you have the deadline being the 7th of August. Now, though it's a deadline, don't see it as a target to submit to. As soon as the client records are up to a level where you have, let's say, the scope in work in terms of what the record should be, there's nothing stopping you from actually pressing submit on the 15th of July. And this is really why it's so important to understand what the scope of work is, what a digital record is, and the fact that actually the clients do not need to actually give approval of these updates, which I'll go through in a little more detail in a moment. But also in terms of other dates, the tax return is still due by the 31st of January. So the first MTD tax return will be due by the 31st of January 2028. So therefore, it's really be thinking about, yes, we've got that April 26th deadline, but actually when you think about the full, let's say, end-to-end journey, there's quite a bit of time, but also in the middle, we think about those other cohorts and periods in terms of, let's say, the thresholds of 30 as well as £20,000 coming into play. So when we think about, let's say, guidance in terms of submissions, so this is where any accountant who is or bookkeeper covered by an institute, they are following the PCRT guidance. And really, this is going back to what is a quarterly update. Now, HMRC have stipulated that these quarterly updates do not require client approval because they are not a report. They are not actually crystallizing a tax liability. And on this basis, the PCRT guidance is the professional standard ones. It's basically saying that as an accountant, yes, you have the professional integrity. You need to ensure that you're not providing or any misleading information. But the key thing is you do not need or require client approval for these quarterly submissions. But also it's the fact that these quarterly submissions should, in theory, reflect the trading performance of that business. But therefore, it's coming down to make sure you have the right checks and balances in terms of the scope of work you're delivering. But also, more importantly, if as an accountant you have, let's say, a bookkeeper involved in terms of doing the bookkeeping for a VAT registered sole trader, you need to be thinking about how that bookkeeper is actually what institute they belong to. So for example, if they don't belong to an institute which are following the PCRT guidance, you may need to put an element of greater clarification in terms of the engagement process. But also the key thing here is the fact that letters of engagement are really important, because when you consider, let's say, a digital record is date, value, and the categorization to the HMRC codes. The key thing is actually what is involved in terms of that quarterly submission. And therefore, I think it's really important that when you come to your letter of engagement in terms of, let's say, MTD, is that you be very clear in terms of what the scope of work is. So, for example, at the basic simple terms, it could be is you have a bank statement, you coded up the transactions. Once they've been coded up, the quarterly update can be actually submitted. Now, in terms of, let's say, review and adjustments, maybe reconcile the sales ledger or the bank account, that is something which you may choose to do on a 6th, monthly or annual basis. But in terms of, let's say, accruals and prepayments, etc., that is left until the year end. But also, more importantly, the fact that clients do go, they move from one agent to another. having that clear understanding in terms of what was involved in the terms of quarterly update makes it so much easier in terms of handing over, let's say, that work to, let's say, another agent, maybe partway through the year. Now, in terms of, let's say, penalty points, under MTD, we've got this new penalty point regime. So this is where, when there's a submission being made late, that's when a point is being accrued. And this is why it's so important to understand maybe the new regime coming through. Now, we're already used to the penalty point regime under VAT, but also more importantly, it's coming down to you'll get a financial penalty when a certain threshold is reached. And this is when 4 penalty points have been reached. When that penalty point threshold has been reached, a £200 fine will be levied. Now, in terms of MTD, VAT, as well as income tax, points will be accrued for late submissions, but they won't be accumulated. So, for example, if you have a sole trader who's also VAT registered and they file their VAT return late, as well as their MTD income quarterly update late, that may be a point each, that may be 2 points, but they are not added together for the financial threshold. But also, more importantly, it's important to understand that actually these points can be reset for good compliance. So, for example, after a 12-month period of, let's say, quarterly updates being submitted on time, those points will be removed. But also, let's just think about those complicated situations where you may have a sole trader with rental income. There are 2 submissions. If those submissions are submitted late, that will be 2 points. So you could possibly imagine that points could accrue quite quickly if you've got multiple trades, or maybe trade as well as rental income, and they are not submitted on time. So it's really worthwhile understanding in terms of making sure that your clients are aware of their obligations in terms of sharing information on a regular basis, and how that can absolutely facilitate that easy workflow and that quarterly update as well. In terms of, let's say, any soft landing period, so for example, under the MTD testing period right now, so in terms of, let's say, we're talking about April 26 as the deadline in terms of getting ready for MTD, we're in the testing period. And therefore, if you are testing MTD now, there are no penalty points for late submission, because the whole point is all about understanding the process. But also, more importantly, when you think about April 2026, should there be a soft landing in terms of, let's say, no penalty points? Well, let's just imagine that 35% of sole traders and landlords not working with an agent today. If we had no penalty points in place, they could quite happily and merrily walk into January 2028, not submitting any quarterly updates with no awareness that their MTD is happening. So I do believe that quarterly updates, quarterly penalty points will be in play from April 2026. We don't just have penalty points, we also have a new late penalty payment regime. And therefore, for those entering MTD, we all appreciate the payment due date is the 31st of January. That is what has been ingrained into our psyche for a very long time. Also, that under self-assessment, if the tax is not paid by day 30, that is when a 5% late payment penalty is levied. And then after 6 months, if it's still not paid, it goes up to another 5%. However, what we need to understand under MTD is that it's the 15 days. So if by the 15th of February, your client hasn't paid their taxes due, that is when a 3% late payment penalty will be levied. If after day 30, that's still not happened, it goes up to another 3%, that's 6% in total. And then thereafter, it's 10% per annum. So as you can see, the whole approach is to encourage and nurture those clients who are not paying their taxes to pay their taxes on time. Now, let's just imagine, under MTD, your clients will have a greater awareness of what taxes are due to the tax estimate. We appreciate it's only an estimate, and therefore it may need additional information to actually get it accurate, but that estimate will give them a nudge in terms of what taxes are due. Now, in terms of the late payment penalties, these late payment penalties can be mitigated and removed by actually requesting a time to pay. So, for example, as soon as your client is in a situation where they feel, no, I'm going to struggle to pay my £1,000 or £10,000 tax liability, as long as they have a time to payment arrangement in place, the late payment penalties will not be levied. And this is why it's so important to create that awareness in terms of the approaches in terms of mitigating some of these. And also the other key thing is submitting the tax return late under MTD no longer brings that £100 late filing penalty. Instead, you get a penalty point, and that penalty point does go towards those 4 points which are accrued before, let's say, the £200 financial penalty is actually levied. Now, in terms of, let's say, think about what submissions need to be made, I think it's really important just to clarify the fact that actually for every self-employed income stream, so just imagine the separate SA 103s that exist on the tax return today, that will be an individual update in its own right. They're not combined. So therefore, for every trade, so for example, we've got Pete the plumber. Pete the plumber is doing plumbing Monday to Friday. That's a submission. Pete may have, let's say, an Amazon side hustle. Well, that's another self-employed income stream. That requires digital record keeping. That requires another update itself. In terms of UK property income, whether Pete owns a property by himself or Peter owns joint property with a multitude of other people, that needs to be combined and submitted in a single update. And that's where the complication comes into play in terms of, let's say, joint property ownership. There are some easements in terms of the fact that if you do have joint ownership, you can literally just submit, let's say, the gross rental income, and you can leave the expenditure submission until the end of the year. This is the same theme for foreign property income as well. So you imagine that we submitted the quarterly updates, and then the end of year process is very similar to what you already do in terms of you'll do the adjustments, the allowances, the inventory adjustments, the capital allowances. You'll bring together other sources of income, whether that's PAYE, taken hold and say interest or dividends received, and then you'll actually perform the tax return itself. Now, the final declaration has been bandied around. Well, basically, the final declaration was the terminology used for the tax return up to last September. So basically, the terminology you should be thinking about is it's the MTD tax return. We have quarterly update and digital record keeping. So in terms of, let's say, think about client engagement, this is why it's really important we think about what you need to do. So client engagement, it's all about being proactive. HMRC have already dropped their letters. They'll continue to do social media campaigns and create additional awareness in various routes. But this is why it's so important to be, let's say, proactive with your clients. So let's just think about understanding it's the who, the what, the when, the where, and the how of MTD, because your clients will be wondering, what does this mean? What do I need to do? And also, is there going to be additional cost to it? And this is why it's so important to be part of the testing and be part of that proactive engagement with your clients. So you start to hear and listen maybe to their concerns, but also understand in terms of how your clients may behave in terms of under MTD, but also more importantly, what you will end up charging for it. And I'll go through in a high level approach in terms of how to charge for MTD later on this webinar. But also, more importantly, think about how you weave MTD in terms of every moment of your communication, because MTD is really part of that continuous theme of, let's say, digitization with HMRC. But also think about that technology engagement. And this is why I think it's really important to be inquisitive. I think inquisitive is the word. It's the time to be inquisitive with every technology provider, get them all lined up, perform that beauty parade in terms of actually asking what are they doing about making tax digital, seek those demos and understand what training they'll be providing. But also think about that full stack review from receipt of a capture to, let's say, the digital ledger, understanding that what that quarterly update is going to look like and how that quarterly update is going to feed into the brand new tax return. And let's just put it out here. Every technology provider who currently perform self-assessment tax software needs to build brand new MTD tax return software. And this is why it's so important to be inquisitive and engage with your current technology providers to understand what they're doing in terms of building that tax return experience and solution, and also working with a multitude of various ledgers out there, which will be supporting the quarterly updates as well. But also think about actually how those partners which you're working with are going to be leveraging generative AI. We cannot miss the opportunity which AI is bringing to accountants and bookkeepers, but also more importantly, how it will actually mitigate some of those workflows, those challenges, some of those chasing of information, but also checking the information as well. And I think this is why it's so important to be inquisitive about MTD for technology, but also ask those pointy questions in terms of how they're really using AI within the platform to actually make life a little bit easier for you. Then it's thinking about what is the step-by-step process of getting ready for MTD. Well, the step-by-step process is really to identify and segment your clients in terms of what's involved. And with this, it's really important thinking about, let's say, MTD, not just about clients, sole traders and landlords, but a whole portfolio. Because really the key thing about making tax digital is time. It's creating capacity to get ready. And therefore really thinking about how you work your clients today, whether they're sole traders, whether they're partnerships, whether they're landlords, or even limited companies. Because if you have limited companies who are not using receipt capture tools, not using bookkeeping tools, well, that's an opportunity, isn't it? There's an opportunity to get them more digitized, so you get them creating time for you so you can devote your time on maybe other areas of your practice. But also, let's focus on the sole traders and landlords. It's really important to understand what are their goals, what are their aspirations, actually, are they thinking of retiring? Because if you have clients who feel that they will be retiring in 18 months, 2 years time, why go through all the effort on onboarding them onto a full-blown digital bookkeeping tool? If anything, they may not get the value. And really, if they're not doing bookkeeping now, really it's a case of how to work with them, be MTD compliant for a short period of time. The other end of the spectrum is you may have sole traders effectively saying, I'm going to be a millionaire in 5 years time. And therefore it's really important to make sure you put them on a digital tool, which will grow with them as well, give them all the features, the functionality and the reporting, which they'll need, not just now, but also in the near future. So it's really important to understand your portfolio today and how they're using technology, not just today, but also in tomorrow. But also thinking about, let's say, who's going to be coming into what thresholds. Is it going to be 26, 27 or 28? Are you going to have any clients actually suitable for the testing, the beta? You may have clients, sole traders who are VAT registered. They're already maintaining digital records, which means it's a really good opportunity to flip the switch in the software and start getting ready and testing MTD. Because really that gives you, let's say, that true experience, that understanding of what's involved in terms of the testing and how to get ready for MTD for the rest of your clients. But also think about those periods. Are your clients 31st March year ends, 5th of April year ends, or actually I really hope you don't have any non-fiscal year ends, i.e. April, September, December maybe, because that will create further complication around the tax reporting as well as, let's say, the calculation at the end of the year. But then also thinking about that engagement with your clients. Who's doing the work? Is it you as an accountant? Do you have a third-party bookkeeper? Or actually, is the client going to do it all themselves? But also thinking about the complexity around some of the income and expenditure. You may have clients who have, let's say, joint ownership, but also you may have a managing agent in place where they're giving a statement, whereas actually the income is actually net of costs. Think about that approach as well as whether it's cash or accruals process is really important, because again, cash or accruals, HMRC, your clients are on a cash basis, and within software in Q1, you'll need to inform HMRC whether you're on an accruals basis. But also think about that record keeping readiness. How many sources of record? What information does the client share today? Is it paper-based? Is it bank statements? Is it semi-digital? How frequent should the bookkeeping or the data processing should be performed? Is it daily, weekly, monthly, quarterly, last minute? But also, what is the quality in place? Now, I think the other key theme is identifying which of your clients have a separate dedicated bank account for their business. Because when you think about MTD, or actually think about how you do self-assessment today, you literally take their bank statements, their various statements, their credit card statements, and you just make it work. But also, when you think about MTD quarterly updates, you really do not want to be digitizing and categorizing all those drawings expenses, or all those drawings items, whether it's their Netflix subscriptions or their grocery payments. And therefore, having that conversation in terms of having a dedicated bank account for their business. It may not be a business bank account, but certainly a bank account for running their business on will make life easier for MTD. So really, this is all about those points which you're going to be capturing on your Excel spreadsheet or maybe your practice management solution. But also it's thinking about how you actually deal with the communication around MTD, because really the communication isn't just about getting MTD ready, but also think about the services you're going to be offering, whether it's going to be allowing the clients to do their quarterly updates themselves, whether they're going to be doing a check or a review and a submit service on behalf of your clients, or we're going to do the full data processing. That key thing will really tie into what you're going to end up charging your clients, but also identify the propensity of your clients to actually engage and learn or actually change their habits and behaviors, because really client awareness is key, but also client awareness in terms of the future of MTD and how you're going to be working with them as well. But also consider, let's say, what are the extra steps you need to involve. Now, I've been mentioning the agent service accounts a couple of times, and I think this is a really important step, because really you cannot do MTD until your agent service account is ready. And part of MTD is your agent service account. Fortunately, you already have one set up because that's the same one which you use for your VAT returns. But what I'm going to do is go through a quick step-by-step of what the experience is going to be. Now, I may be showing what it's going to look like, but really important for you to do this yourself. So therefore, when you actually go into your agent service account, your clients from your HMRC online service account have already appeared in there. But you need to go into each of your sole traders and landlords and do this process. You need to validate their personal details in terms of names and addresses and their national insurance number. You need to actually validate these details, so there's some steps involved, and actually confirm whether these are correct. You'll then also be confirming your clients are eligible for it, and your clients will be using software. You'll also be directed to a software selection page if you haven't already made a selection which software. I hope to be maybe one which is green, but also more importantly, you'll be able to then sign up your clients in terms of eligibility, in terms of this extra sign up process. You'll also be checking whether the software is compatible. Sorry, there are some steps here, but also you'll be able to confirm whether your clients are ready for MTD. Now, the other key question is, when is your client coming into MTD? Current year or the next tax year? Current year basically means you're bringing your clients into testing in this financial year. Next year is deferring them until April 2026. So therefore, get this question ready on your segmentation tools spreadsheet. Then you're basically agreeing to MTD, and really in a nutshell, this is all about your clients will be maintaining digital records, they'll be submitting their business income expenditure, and they'll be using software to submit these quarterly updates, and therefore any missed quarterly updates will bring in a financial or penalty point, which may lead to a financial penalty from April 2026. But also more importantly, you'll be submitting their tax returns via software. The other key thing is you'll also be reporting the other income sources, and therefore this is a really important factor because you'll be telling HMRC, my client has more than one self-employed income stream. You'll be confirming that self-employed income stream. You'll also be punching in the name of that business. So for example, you may have James, but actually you're going to be typing in the business name for the James is James Electricals. But also if that client actually started trading in the past 2 years, you also need to type in the date of when that business actually started trading. So again, make sure you've got that information available on that spreadsheet. You'll be confirming the client's multiple sole trade businesses. You'll be confirming the data when they're started. Obviously, only for those signed in the last 2 years. You'll be checking the answers within HMRC. Then also you'll be confirming, does my client actually have any property income? And if it does, you're going to be adding the UK property income as well as any foreign property income. Again, similar basis. Are you using cash basis or let's say accruals basis? Obviously, it's going to be cash basis because under £150,000 of rental income. Anything above that will be on an accruals basis. And then you'll complete. Now, that's a fast flow in terms of steps available. It's going to take 4 to 5 minutes to set each one of your clients up in the agent service account. I recommend you do so once you're doing the 24-25 tax return, because you have the tax return in front of you, so you have all the information available. But also, more importantly, don't leave it to the last minute, because I'll be honest with you, you have better things to do in February and March 2026, and therefore putting it part of your process today is really important to actually, let's say, alleviate some of the time pressures into next year. So we've set your client up on the agent service account. The next thing is to set you as an agent within your software. Now, this experience should be the same no matter what platform you're using. So from Sage's point of view, we're trying to make this as easy as possible. So for example, this is where you've already done that digital handshake to say that you are MTD for VAT ready. This is the same thing for MTD for income tax ready. So you'll put in your agent's government gateway, you put in your password, you may be asked, let's say, validation for, let's say, your passport number or something, depending on the day of the week it is. But really that will then perform that digital handshake between you, the software provider, and HMRC, which then means you can start to onboard clients through the platform when they are ready. But also more importantly, just like MTD for VAT, this is a handshake which needs to be performed every 18 months. But also more importantly, when you're in that platform, then you can start to set your clients up to perform that digital handshake with the software itself. And this is why it's so important to do maybe 1 or 2 clients through the testing to really feel and see what that experience is in terms of setup. And then you're actually going to be setting up your clients within software. Now, from our point of view, we're trying to make this experience as simple as possible for every solution. So whether it's a bookkeeping tool or whether it's auto entry accounts prep or Sage Individual, the experience is going to be the same. It's effectively putting the client's national insurance number. And the reason why it's national insurance number is because the whole point is that's where the interest feed will come through eventually. But the whole point is that setting up within the ledger means that the additional categorization codes will come into play automatically, which you can then actually move around depending on the normal structure in play. The next step is all about, let's say, the actual digital record keeping itself. Now, from my point of view, this is where about understanding those clients' needs and also whether they're going to play ball with MTD. So when you think about making tax digital, people think about a lot of change. Well, my approach is all about choice. Yes, where you have a client who's engaging with software, they're sort of digital savvy, they're quite happy to use a mobile device, they may be raising their own invoices. This is where naturally they'll start to use bookkeeping tools like Sage Start, Standard and Plus. They have more functionality. They may be dealing with invoicing where they're actually managing contractors for CIS. They may need more reporting, or they may need to be VAT registered. All fell and good. All mainstream, all great, brilliant. But actually, when you think about MTD and sole traders, these are individuals who have never really engaged with software. And therefore, you're thinking about solutions which will work intuitively with them. So if you have clients who are quite prepared to use a mobile device or browser-based interface, they're quite happy to sort of use their mobile phone and take a picture of their invoice. They may want to have a bank feed come through and have some of that digitalization. They may collaborate with you and do some work. This is where Sage Individual is absolutely key. It's been built purely for MTD. So if you imagine it's intuitive, it's got that Apple type feel of, let's say, that nudges and the prompts and the training in place. You can do your receipt capture. It's got the AI built in. They've got the bank feeds, and so they've got the invoicing. And also, more importantly, all the ledger solutions have tap to pay. So if you imagine there's a reason in terms of why should businesses use digital bookkeeping tools? Yes, it's about being MTD. But if they can actually raise an invoice on the fly and tap phones together with their customer and get paid instantly, well, that's the value of using digital bookkeeping tools. Now, Sage Individual via an accountant or bookkeeper is only £4 a month, and therefore it comes with all the richness which you need. But also, Sage Individual has a free tier as well. We recognize there'll be some clients which literally have a handful of transactions. They may have bank feeds and they just want to sort of do some basic bookkeeping. Sage Individual comes at a free tier. It may not have invoicing, it may not have some of the fancy reporting, but at least it'll support the quarterly updates and at least get clients onto some sort of digital tool. However, let's take a step back. Let's all be really honest with ourselves. We will have clients who today bring in a shoebox, a bag of records. They don't believe in online banking. They are a bit nervous around bank feeds. And therefore, these are the clients which you're thinking about, how do I work with these? And this is where auto entry accounts prep is your secret weapon for being MTD ready. So auto entry accounts prep is being used today by accountants and bookkeepers to streamline the end of year process. So a lot of accountants and bookkeepers are using their end of year clients. So basically those limited companies, those sole traders who aren't VAT registered, they bring the records in once a year, pile of bank statements, and they want to basically get a job done as quickly as possible. So effectively people are turning a 30-hour job into a 3-hour job. And really the key thing with auto entry accounts prep is basically it's the savior to MTD. We all know there's 158 working days to MTD. Trying to get clients onto ledger is going to be a bit tricky over the next 6 months. And therefore, it's a case of gives you the reassurance that where you've got clients who are doing manual records today, you can bring your clients into manual records now, get them digitized, catch up on 24, 25, do 25, 26 really quickly, and be MTD ready in terms of your quarterly updates, which then means from April 26, you can start to pick and choose which clients will maybe better on Sage Individual or Sage Start or Sage Standard. But the key thing is you have choice in terms of how you're going to work with these clients. And therefore, those who've not seen auto entry accounts prep before, it's really ideal for those shoebox receipt clients. It enables you to do all those cash takings. You can basically import your CSV files. So you may have clients with bank statements. You've got those bank statements scanned within auto entry, and like auto entry does, it scans all the details of the bank statements, identify which bank statements are missing possibly, but gets into the ledger. But also, if you've got clients who do have online banking, they may be a bit nervous about bank feeds, but if they share with you the CSV file, you can drop the CSV file and the Excel spreadsheets into accounts prep and it'll code it all up for you. So the key thing is it's ideal for those simple clients who aren't going to play ball with software. So I'm just sort of quickly showing in terms of what it's going to look like, so you have a bit of a flavour. And what I think the key thing with auto entry accounts prep is let's just go Google auto entry accounts prep, and there's a beautiful 6-minute video which will just bring to life what you can do with it. But clearly it's all about getting data in. It's all about producing those profit and loss accounts and the balance sheets and the trial balances. It's got the fast coding. It's got the capability to split transactions, post the journals. And what we're seeing is that accountants are using this as the ledger for the year-end accounts prep. They do all the work, do all the journals, do the trial balances. They get to basically the final trial balance and drop that into their favorite compliance tool, whether that's Sage, whether that's CCH or Digita or Iris or whatever they use for tax calc, whatever they use for their year-end compliance, year-end accounts. They do all the work here and drop it out there, basically get the tax return done. But really, this is where this is going to be your secret weapon, being MTD ready. Be able to get the quarterly updates done fast, be able to do the submissions through this, and they're being ready for those clients who will not play with MTD, who will not play with technology, but need to be MTD compliant. And really, this goes back to the point I was making. Being inquisitive with software, really invest and think about how you can use software to make your life easier. So with 20 minutes to go, let's start thinking about those other things we need to be considering. Now, the other big thing, which no one is talking about, is actually the tax return itself. I did mention earlier the fact that actually we're talking about the tax return, but also what is that process involved. So when we think about the tax return, the first thing we need to do is start sharing information with HMRC. And this is all about those quarterly updates. And therefore the quarterly update is all about that sharing of information to HMRC. So the quarterly update nudges will give you, let's say, the time to go in terms of the MTD. You'll be able to see those light income and expenditure report. Please note, there's no declaration, as I said, there's no declaration from the client. You can just press submit. And therefore it's a case of give you the number of days to go, but also give you that live tax estimate. Now that live tax estimate is feeding in terms of the quarterly updates of the income and expenditure from self-employment as well as rental income. It's got a live feed from PAYE for under RTI, but also here's the great thing about it. Where you have clients who are having CIS deducted at source, you've also got a live feed of CIS deducted, which means where you've got those grounds workers who have really rubbish bookkeeping, you can actually see how much CIS is deducted at source, which will make the end of year so much easier. And when we think about the end of the year is pretty much the same, but it's in brand new software. So you've done your quarterly updates, you've either sucked the quarterly updates to HMRC, or you're going to be continuously updating the ledger to improve the information, or you may take the trial balance from your ledger and drop it into your accounts prep tool and then do the actual tax return through it. But what you do need to do, you need to subscribe to brand new MTD tax return software. And this is why it's so important. From Sage's point of view, we're building the tax return software within the ledger, but also as a standalone tool as an accountant or bookkeeper to use to consume information, whether it's from a quarterly update, from as an Excel spreadsheet, whether it's from Xero, QuickBooks, Free Agent, whatever, just to get the tax return done. But the key thing is the process is about the same. You still need to gather the other sources of information, maybe dividends received, PAYE, losses and allowances, gift aid. You still get the information together, but then you start doing the tax return itself as well. So from Sage's point of view, here's a bit of a sneak peek in terms of what it's going to be looking like, but we'll be in a proper showcase of this with our AI agent at Accountex on the 23rd of September. But the key thing is to understand the fact that within the platform, you'll be able to do complementary the MTD tax return itself. But also the key thing is with under MTD, you still need to do self-assessment. So we're trying to make this life really easy. The fact that you'll be able to flip between making tax digital and self-assessment, new world and old world, because the whole point is you still may need to do a repair under self-assessment, and we need to make this life as easy as possible. So under MTD, you'll start to spin up your brand new making tax digital tax return. It'll create the tax return in the background. It'll identify which return you need to create it for. And then you'll have a choice in terms of bringing that income stream in. So you'll also be prompted in terms of how many self-employment income streams I'm delivering for. Do I have some property income? Do I have some savings, or do I have some dividends? And you can make this life as easy in terms of, let's say, listing format, or maybe a panel format, depending on what triggers your fancy. But then you'll go into, let's say, self-employment, be able to identify which self-employment is, because remember, you may have multiple self-employment. So in this case, Sophie has a bakery, but also Sophie has some sweet treats. So therefore, it's a case of how to report upon those separate self-employment income streams. You'll be able to dive into each one of them, be able to review the quarterly updates submitted via your whatever software you like, but also more importantly, you can review that information, you can go into that information, and then you can actually make additional adjustments, even though you're not making those adjustments to the actual underlying bookkeeping tool. And this is the whole point. MTD is all about maintaining records digitally, but it doesn't stop you from actually doing the work you already do today. So if we make those adjustments, in this case, we're going to make an adjustment to, let's say, not just the allowable, but the disallowable, the actual figure itself. You can update the tax return, and therefore you can then send that to HMRC. Obviously, this time the client has confirmed what the tax return is as well. So I've just stepped through those steps quickly, but I think the key thing is what you need to start asking, though, is from your software provider, what are you doing about the tax return? Because it's so important that you really understand the end-to-end workflow, from the capturing information, turning the wheel on the digital record keeping, submitting that quarterly update, and then how does that flow into your Making Tax Digital tax return solution. Now, this webinar isn't about pricing. You can reach out to me on some other content which delivering on pricing for MTD. But I think what's really important, I've been talking about the setup and the processes, but also the point in terms of have that conversation about pricing, that you really understand what is available and how you should have that conversation. Now, from our point of view, having multiple of conversations with accountants and bookkeepers in terms of how they're approaching MTD, we have a 7-step plan. I think when you think about pricing for MTD, you should break it down to 7 steps. 1, there is a cost for setup and training. Whether it's setting them up on the agent service account, whether it's setting them up on software, the training involved, there is some sort of setup to it. And therefore, that should be part of that process. What you charge for it, it's up to you based upon the effort involved. But clearly, that's something that you can set out in that conversation with our pricing for MTD. Then we actually have the quarterly updates themselves. Pressing the button. Yes, it's pressing the button. Though you don't need client approval, you may have review processes within your practice, and therefore time is involved. So whether you're going to be charging £15 or £50, there should be a charge for performing that submission to HMRC for the quarterly updates. Then we have the data processing. The data processing will vary depending upon what's involved. The number of transactions need to be processed. You may have tiers, you may charge by individual transaction, but the key thing is there is data processing, but also there is bank reconciliation. For example, if you've got a client with a single bank account, great. If you've got a client with multiple bank accounts, or basically bank accounts with an awful lot of personal transactions which need to be coded up, not so great, because actually you should be charging more for it. You may have credit cards which need to be reconciled. Again, that process is of value. That process needs more effort, and therefore you can start to see that you'll have a shopping list of processes in terms of how you actually charge for MTD. Then let's go on to bookkeeping. As I said, the key thing about MTD is digital record keeping. It's not digital bookkeeping. Bookkeeping is about accruals and prepayments and inventory adjustments, getting the fixed asset right and the depreciation. That can be left until the year end. But clearly some clients may wish to have a really accurate tax estimate, or may see more value from having a really good understanding of how their business performance. And that is where you'll bring the bookkeeping involved, and its additional fee line if you wish to do so on those quarterly updates. Then we have the tax return itself. Some tax returns are easier than others. Some tax returns will have multiple trading incomes, they may have property, they may have dividends received, they may have other further adjustments. Also, some clients may be a bit more troublesome than others. They may go through additional drafts and reviews which they may need to be performed. And therefore, it's really important to reflect upon how you do tax returns today for some of your clients, and think about how you're going to price that going forward. And then also not lose sight of the fact actually around the tax return creates that proper conversation in terms of actually what planning should we be performing. Maybe that's just been wrapped up in the fee. I think it should be really clear in terms of what's possible with the tax planning, whether it's IHT, inheritance tax planning, whether it's in terms of pensions. There's so many conversations, but that should be laid out bare. When it comes to MTD pricing, this is a service you can offer, but also it's a service which is chargeable. So this is why it's so important to get involved with the testing of MTD. The testing not only gives you the confidence in terms of the processes with the agent service account, it gives you the understanding of what software is available, but also more importantly, it gives you an insight in terms of what you could and should be charging en masse with your clients. And therefore, it's really important that you think about getting involved in MTD and the testing and bulk process itself. Now, I've not got no questions coming through the Q&A yet, but if you've got any questions, please do so, and I'll deal with those in a moment. So as I wrap up this session, what things should you be mindful about going forward? Well, I think the first thing is sorting out the education. MTD is a complex matter. There's a lot of moving parts. It's all about the details, and this is why it's so important to engage with your software providers and really understand the details around MTD. I'm really proud of what Sage is delivering in terms of education and MTD Hub, and therefore it's so important that whether it's you or your colleagues within your accounting firm, getting to grips with MTD is so important, because then you have the confidence of having those conversations with your clients and also what MTD will mean to your practice. Then it's all about client segmentation. Client segmentation is probably one of those really important steps of making tax digital. Not only do you identify which clients are coming into MTD and when, you also identify actually where there may be some easy wins in terms of efficiency. You may have limited clients that actually may have some benefits of moving into a digital ledger, but also more importantly, you understand some of those clients will be working to certain software providers in terms of, should it be a client which you're working with in terms of, let's say, those end of year processes with auto entry accounts prep, pardon me, or maybe is that a ledger solution which basically has that collaboration which you need. But the key thing is perform that segmentation, identify which ones are under calendar reporting or standard reporting. Is it 5th of April or 31st of March year end? Is it cash accounting or accruals accounting? What are their future aspirations? All this information needs to be captured either in an Excel spreadsheet or in your practice management solution, and then you can tick off that task list in terms of what you're doing and sharing with your colleagues within your practice. Then it's about having a plan. Now, the plan is all about what are you going to do, when are you going to do it, and how you're going to do it. And that plan may be being created in your mind, but is it written down? As soon as you have this plan written down, whether it's on a piece of paper, an Excel spreadsheet, on your whiteboard, having visibility of those milestones, what are you going to do? How are you going to do it? What are you going to do this week? What are you going to do next month is really important. But the key thing is having that plan. That plan will evolve over time. It's all about having those learnings in terms of what MTD is all about, having those conversations with clients to understand who's going to do what, but also think about an engagement with those clients about MTD. Because the key thing is HMRC have reached out to your clients and they'll continue to drive awareness about MTD. And therefore it's so important, whether it's a conversation, whether it's doing your first MTD webinar to your client base, or whether it's a physical face-to-face event with your clients. And I did one a couple of weeks ago with an accounting firm. We just invited all their sole traders into a village hall. We talked about making tax digital, and it was really surprising how engaged the sole traders were. We even had sole traders who wished to sign up to software there and then because they wanted to see the value of digital software. And really, here's a bit of a war story. It's a case of, we had a sole trader where they had about £20,000 of PAYE income, but actually they had a bit of a side hustle, turning over to £13,000 to £14,000 a year. But the thing is, because of that flex of about £1,000 per annum, they weren't quite sure what their tax liability was going to be. And really, they wanted to go into software so they knew where they could go on holiday every January, because they had that visibility of the tax liability. And this is why it's so important to perform that engagement with clients early on to understand their conversations, whether it's negative or whether it's positive, and what they want to do to get ready for making tax digital. And then it's thinking about those software solutions. And I think this comes down to that sort of triaging effect in terms of who should do when and where and how. But also, what is the propensity of your clients to engage? If your clients do not want to play with software, what they'll do is they'll bring their bag of records in, not once a year, now once a quarter. Auto entry accounts prep is that key tool. Go and Google it. Do the follow-up conversation. It will make your life so much easier. But clearly, where you have clear clients who have more complex needs, they want to do invoicing, they want to be doing ready for VAT, they may be trying to do something with CIS. That is when you start looking at those ledger solutions from individuals to start and standard. But the key thing is having the right solution based upon your client's needs. Then it's all about those pricing conversations. Now, pricing, as I said, is an important subject. Now, you will have to review, reprice, and re-engage all your clients. You'll have to issue new letters of engagement because there's a new taxation It's a new activity, it's a new scope of work, but also more importantly, think about how your clients are going to pay you. Because the majority of sole traders, you do the work, you raise a bill, you raise the tax, show them the tax bill, it's all in one go. MTD is a continuous flow of work. So clients who are paying you annually should be paying you monthly, if not quarterly. But also it's the fact that when you think about next year being 2026, you have a typical client maybe charging them £600 per annum. You may charge them £50 a month, £60 a month, but just imagine how they're going to feel. In that year, they're effectively going to feel paying you twice. And this is why it's so important to have those conversations now about payments on account in terms of paying monthly to you for the professional fees, playing catch up. So when it gets to April 2026, they're already paying you monthly. They already may be up to date on the 25-26, and therefore when it comes to MTD going forward, they're paying you on account within the year. And this is why it's so important to get to grips with MTD and the pricing and the planning of it as well. Then we're considering joining the testing of MTD. I've mentioned it a couple of times. One, it's just to have an awareness in terms of that agent service account. One, it's giving that confidence in terms of what's involved in terms of that submission, but also more importantly, giving an understanding in terms of what does chasing a client look like, getting records a bit earlier. But also with the testing, it gives you the confidence in terms of actually being part of something which is much larger than just your practice. It's thinking about that exchange of information, what does that look like, but also more importantly, having that help and support you need. Now, by clicking on the QR code, it'll triage you in terms of a nice flow and working with Sage, and therefore you need a helping hand, some human support in terms of getting ready for the testing with MTD. Well, no matter what software, I think this is a really good opportunity to get that help and support and basically ask those silly questions, but more importantly, give that helping hand to think about that process is all about. Now we're thinking about how do you really streamline, systemize for success. When you think about MTD, it is all about not just saving time, but creating capacity. And when you think about where your practice sits today, your practice is doing more than just bookkeeping. You're doing AML, you're doing KYC, you're thinking about letters of engagement, you think about bookkeeping and payroll and compliance in the cloud. And this is where all is about how do you streamline for success. And this is where it's all about revisiting all those processes within your practice and how you can actually use software to actually make life easier. So if today you're still using Word documents for letter of engagement, there is a better way. If you're thinking about how do you make your KYC or AML processes more digital, there is a way. And this is why it's so important to be thinking about all those systems and processes which can be automated within Sage for Accountants, and all of which, most of it's actually complimentary, just comes out of the package free of charge. But also the other key thing you need to be considering is how can you use AI within your practice. Because at the end of the day, you would have seen or played in terms of ChatGPT and Microsoft Copilot or Google Gemini. You'll be amazed in terms of what it can do. But just imagine what you can do if you bring that technology within the bookkeeping ledger, within your payroll, within your practice management solution. And this is what Sage Copilot's all about. We've already released the MTD VAT agent. And really what this does, it reviews and checks the data, identifies the duplicates, and basically makes the corrections on your behalf. Now we're delivering the MTD AI agent in the next couple of months. And this will enable you to automate the whole workflow from setting up your client for MTD, in terms of reviewing the quarterly updates, chasing the clients, but also giving the confidence in terms of where you're on that workflow. This is a really exciting period. This is the time to really start geeking out again on terms of technology, because when you start being inquisitive and seeing how generative AI, especially Sage Copilot, to help support your practice, it really is there to get work done faster, give you the insights you need, and really getting ahead of MTD. And then also think about the support you need. Now, I'm really proud of our MTD support hub. Basically, it's got everything you need. Yes, you've got, let's say, the written legislation, you can watch webinars about me all day long if you wish to do so. But more importantly, it's got those email templates which you can copy and paste and send to your clients about making tax digital. It's all about having that starter for 10. It even has an Excel client segmentation tool to make life easier in terms of identifying all those processes. But the key thing is getting help and support for your practice when you need it, just when you need it. Because then the whole point of making tax digital is how can we simplify the process? From segmentation, that engagement with your clients, the engagement with the technology providers as well as your colleagues, making sure you have a plan in place, understanding what to do, when and where and how, and also think about the whole first on onboarding, whether it's getting ready for MTD, getting clients on a digital solution, or just testing MTD with your favorite client. But more importantly, it's all about how do you build your plan, and therefore getting the support you need from whatever technology provider. Hopefully you see some value from Sage. Also, more importantly, being inquisitive about the technology and understanding there are certain tools, especially auto entry accounts prep, which will save you time, create the capacity, and work with those troublesome clients who will not work with software. And there we go. We come to the end of this webinar, and hopefully you found it really useful, and hope to see you all very soon. Thank you very much.